You're listening to Smart Moves with your hosts, Ann Riley Caldwell and Matt Wilson.
Hey, welcome back. We are on the Smart Moves podcast where we help you make smart, strategic, and smooth moves here in Middle Tennessee when it comes to real estate, finance, and sometimes life advice. You just never know what you're going to get. I'm Ann Riley Caldwell, not your ordinary agent, and I'm an agent that works all of Middle Tennessee. I'm here today with my co-host Matt Wilson of New American Funding, lender extraordinaire, branch manager, and all-around great guy. And today we're going to talk about some zoning changes that have just happened in the Nashville, Davidson County area. December of 2025, we had a couple zoning changes and bills that passed. One of the bills creates two new zoning districts. One is called the residential neighborhood and one is called the residential limited. And the goal is to add what is now referred to as middle housing in the Nashville area, which means instead of a single family home being on a piece of property, you would have anywhere from 2 to 6 units being on that property. So there's lots of pros and cons to that. I'm going to do a separate podcast about it that you can go check out, but I'm going to go over a little bit today, and we're going to include Matt when it comes to specifically some pros and cons and what it means for you trying to add a structure to your current dwelling potentially to your property, and or what's going to happen as we start to see potential shifts and changes. Now, before anything can happen, things are going to have to be officially rezoned in certain areas. So this is just not an automatic slam dunk. But if that happens, you're going to see a couple of possibilities. The first one we'll talk about real quick will be, instead of a single family home, you might have a townhome, a triplex, a quadplex, instead of just that single family. The reason for this, and I'll get into this with Matt, is supposedly over the next decade, someone thinks that we need 90,000 more residential units in Nashville. So good luck with that on all kinds of levels. But anyway, particularly middle housing, which should also reduce the price in theory if you're buying a townhome compared to a single family home. But one statistic that stood out is 83% of the people in Nashville, there are households earning less than the average median income. So Matt's going to talk to us a little bit about average median income, what it is, why it matters, and what it means for anybody that might be trying to get a loan that's below that threshold.
Yeah, so the average median income or the area median income, it's basically used for a lot of like down payment assistance products. It's used for grants. Down payment assistance can sometimes be synonymous with first time home buyers. But basically, it's an income limit that's going to determine access to some products. With that being said, it's kind of a blessing and a curse because a lot of the times in some areas, if you actually meet the criteria to be under that, unless you literally have no potential debt other than your house, sometimes it's actually pretty hard to get qualified to purchase just because they're not always going all the way to the AMI. They're sometimes like 80% of the AMI is what you're allowed to use for that product. That's really what it matters for is which loan offerings might be available to you and how much down payment assistance you can get alongside potentially some better interest rates in some of those situations. Like they do try to subsidize it to a certain extent. So if you've got particularly low income, the rate might be a touch better to help you qualify for a little bit more. But you kind of, in my experience, you get into diminishing returns there, honestly. There's also options out there that don't require the AMI to be met in order to get down payment assistance. So you don't have to be under that threshold. The good thing is like it's easily Googleable. The bad thing is it's different literally from, county to county and area to area. So I'm not going to sit here and pretend like I can memorize all those. I'll look them up every time I need to know it, because it's just impossible to keep up with what it is. And it changes every year. So every year it's going to change by a few dollars, typically going up. In rare occurrences, I'll see it go down. But that's only if for some reason the county seems to be going down as far as, general income level. That's interesting what percentage did you say? 80% is below the AMI?
It said 83% need is for households earning below the AMI.
That is a lot. That's
Yeah.
a lot of people right there. I didn't know that it would be that high. Um, so I mean that is interesting. Um, that's a whole
Well,
nother
I think
socioeconomic
I
class to
think
talk about there.
well, I mean, I think that's part of the point is we're trying to not only add more units, but figure out ways to make them, quote, more affordable. So, however you want to define all those things at any given moment, right? So,
Sure,
quick
sure.
question. Who actually sets the AMI? Is it local or is it federal or is it a combination?
It's federal. It's
Okay.
federally set. I'll be honest with you. I'll have to look that up. Give me just a few minutes, and I'll tell you who actually sets it. I
Sorry.
don't know which
I
agency sets it.
sprung I sprung one on him. Well, my thought was because we talk a lot about THDA, which is a Tennessee Housing Development
Yes.
Authority that has a first time homebuyer program. So I was just wondering if you knew, which is okay if you don't off the top of your head, do they have any ability to change the AMI as I'm thinking about it in order to make maybe that particular product work a little bit better for the group of people that this is trying to help?
Yeah, so they've got their own income limits that aren't necessarily directly associated with the AMI. And the AMI is published by HUD every year. So that's who does it at the highest level. The
Okay.
income limits for THDA are going to be set by THDA though, like you pointed out. So they're not one and the same. They do change also from county to county. So, of course, in Davidson County, where Nashville is, or in Williamson County, next to Nashville, it's going to be a little bit higher. That being said, a lot of times it's still not high enough that you could go qualify for your $1 million penthouse in Nashville or anything like that. The other factor with THDA is they've got the acquisition limit too. So, like, you can only qualify to purchase with THDA right now up to $400,000. So even if you're putting down a little bit of money and don't totally need the down payment assistance, if it's 405, it's out. It's got to be below 400. So that can be a limiting factor too, potentially, the closer in to the center of Nashville that you get.
Well, and I would make a plea for THDA, who has not raised that limit for quite a while now, that
Yeah.
400,000 in Nashville is kind of ridiculous, or actually other parts of Tennessee also, since it's Tennessee related. But yeah, it's about time to bump that up, kids. But anyway, that maybe another podcast. I have a lot of clients that need just at least a little bit more. I mean, 450 would be more realistic with how things have gone up lately. But anyway, they didn't call and ask me, but maybe they will. So the other part of this bill that we're going to talk about is the bill expands the ability of people to have what we refer to lovingly as a DADU, which is a detached accessory dwelling unit. So say that like 10 times together. So it could be garage apartments, but I mean, particularly what this looks at is if you have a big enough backyard, primarily, you could actually add a detached living space now, potentially, again, if it gets zoned for that. There are a few requirements I'll go over just really quickly. The owner must live on the property. So the owner either has to live in the primary home or they have to live in the DADU. So if they want to move out there, they can. 1,200 square feet is the maximum. And again, depending on the size of the lot, it could be less than that, but 1,200 supposedly is the max that I have right now. And as of right now, it cannot have a short-term rental. So you cannot create it in order to Airbnb or Verbo or I prefer VRBO, but anyway, whatever that's called. So you can't do short-term rentals, at least as of right now. As we know, things change, but those are the requirements right now. So a few questions for Matt on the lending side. So if you live in a single family home right now and you have enough space and you want to go out and get a contractor to build a DADU for you, Matt's going to tell us a little bit about what that would look like and what your loan options might be to be able to do that and qualifications, etc.
Yeah, so we'll just assume that you qualify with all of the local government stuff. Like that's outside of our wheelhouse here. As far as like zoning, obviously they're changing the zoning, but as far as permitting and all that stuff goes, we'll just assume for the sake of the conversation that all that is good to go. There's really three major ways you could potentially do it. Like if you've got a lot of equity in the house, you could do just a simple cash out refinance, or a second option would be a home equity loan, and just use that cash and pay cash to do your renovation. The third option would be doing a renovation loan. That's actually going to let you potentially do it based off the future value of the property. The biggest hurdle that you would have to overcome in any case is if you're financing it as a renovation loan or down the road when you go to sell, is just going to be finding comparables to compare it to. Because if you've got a average 2,500 square foot house that now has a 1,200 square foot dadu in the backyard, then it's not average anymore. It's got to be compared to other homes that are like that. I wouldn't let that completely scare me off. I mean, I've had homes in the middle of basically nowhere, Tennessee, that qualified somehow anyway. Like they found enough out there that it could be a good option if you've got in-laws that need a space to stay and you don't want them in the house with you, which could be the case. Or if you've got aspirations to have your tenant live in your backyard, there you go. I totally relate and understand with why they wouldn't want to have short-term rental, because if you think about the clientele in Nashville these days, you'd have a bachelorette party in your backyard every weekend, and that sounds not so fun. So anyway.
So from a loan standpoint, would it make a difference if they're going to use it as if they're going to use it for family members versus if they're going to rent it, if they're able to, even for a long-term rental? Will that make a difference?
Not really. That's not the thing that we'd be able to play off of there, I don't believe, because you're stacking complexities now where it's not only are you looking at a construction loan or a renovation loan, but also an investment property loan, which would just not be in your best interest to put those things together from a rate standpoint. I would imagine that 99% of the time, if they're being financed, they're going to be financed just as honestly, probably just a home equity loan, because equity is so high in the local area, especially after the last couple of years. It's going to probably be the cheapest path for most situations.
Okay, we'll do a podcast one day about multi-generational living, because I have lots of clients trying to pull that off in various ways. So one pro of this is for some people that might actually solve that issue. And as Matt mentioned, I mean, the biggest thing will be working with real estate professionals for those comparables, which means looking at other properties similar to your property in order to price your property, whether you're eventually looking at maybe getting a HELOC and have to have an appraiser come out, and of course, if you're going to sell it. So over time, it will take a little bit in order to sort of figure that out and have appraisers have rules and regulations. I mean, there's some DADUs out there now in Nashville, especially in East Nashville, so it's not totally outside the box, but as it continues to potentially expand into neighborhoods where it's not common right now, then that's something that we would have to talk about and get ahead of. When it comes to somebody looking at a property, again, appraisal would be part of it. Any pros and cons that you see if I'm a buyer and I'm wanting to go buy a property that has a DADU on it?
I mean, from a pro standpoint, obviously there's the revenue opportunity there, or the spot that's not in your house for your mother-in-law to live. I like my in-laws. I don't know why I'm sounding like I don't right now, but some people don't. You know how it goes. Anyway,
Oh, yeah.
With that being said, the biggest con would be just making sure there's enough comparables, because it's possible that while it may technically, in practical value, add a significant amount of value to the appraisal, from a comparable value standpoint, it may not. You may run into a situation where on that side of town, there's just not a lot of them around. That being said, if it works anything like barn dominiums have over the last couple of years here, after this goes into effect, and assuming it's smooth sailing with people doing it, barn dominiums were almost unfinanceable about 5-6 years ago, but now there's so many of them around that you do have comparables. I always like to make the comparison there to log cabins. If you're trying to buy a log cabin in Nashville, it'd probably be a tough road ahead to find, if it's a true log cabin, to find comparables for it. But if you buy one in Gatlinburg, like, they sell 1,000 of those a week in Gatlinburg, so you got comparables all day long for that. I think that over time it'll get easier and easier, honestly.
Well, and I'll divert to the log cabin real quick, because I have a client that bought one. And so this is where also using a local lender that uses specific appraisers that know the market. Sometimes when you use the big name companies, they don't have great appraisers, or they don't have necessarily local appraisers. And especially when you start getting outside of metro-y, Murfreesboro, like bigger cities around Nashville, they really don't know what to do with that whole thing. I had an experience with one of my clients. He used a local lender, and so the appraiser was all over it, even though there weren't a lot of log cabins in that particular area where he bought one. But then he told me that he wanted to try to either get a HELOC or refinance it, whatever was going to be better for him to pull some money out of it from the equity having gone up so quickly. And he didn't listen to me, and he thought that one of the big companies, because one of his buddies used them to refinance his house that was not a log cabin, was the way to go. And they didn't have a clue as to what to do on the appraisal. I mean, they came back with such a low number that was barely more than he had bought it for. And, I went in, I did comps. I'm like, dude, you've got $75,000 to $100,000 in equity, in my humble opinion, not being an appraiser. So then he finally listened to me, used the local lender that he originally used, because they already had, the original appraisal. They could tell how much the market had gone up since the time that he bought it. And sure enough, he was able to actually get it accomplished, where the big company told him no, that they wouldn't touch it. So just another plug for using local people and knowing who lenders use as appraisers, I have found over time, is extremely important. So I would say when we start navigating into this territory, using people like Matt, New American Funding, my experience has been they have great appraisers that they are able to tap into. Those are some things that people don't think about when they're considering who to use as a lender or who to talk to as an agent that's going to provide recommendations. Because I've run into several lenders out there that appraisers have kind of been tragic. I think it's okay to say that. So anyway,
You can say
those
it.
are just,
You can say it.
yeah, I can say it. Yeah. So I can say it. Matt probably can't say it, but I can say it.
Oh, I can.
But
I've fired appraisers. To your point, our company manages its own appraisal panel. We don't use a third party for 99% of our appraisals to schedule it. And I've had appraisers in the past that did some things that were not satisfactory, and as a result of that, they don't do appraisals for our region any longer because they weren't upholding the standards. I mean, things like my favorite. I had an appraisal one time where they used it was a proper comparable, but they used the sales price in their comps from the sale 4 years before this had sold most recently. So we got 4 years of appreciation that wasn't accounted for. The appraisal came in 50,000 low. And after I looked at it, I was like, well, one of these things is not like the other. Why is this so low on these comps? And then I realized after looking at Zillow, I'm sorry, it was Zillow. That's all I have access to. I was like, okay, this is what it sold for in 2021. It's now 2025. What in the world are they doing here? So that guy's not appraising for us anymore, as you can imagine.
well, that's good. I mean, I had one that the property was here. It was just right outside Nashville. It wasn't anything super fancy about it. And the bigger company that the buyers were using, because I was representing the seller, they brought in somebody from Kentucky. I'm like, how does somebody from Kentucky have any idea what's going on? Actually, it was basically between Nashville and Dixon, Tennessee. I'm like, it's not even on the border of Kentucky. So yeah, we've got stories, people. But anyway, one other quick question, because I don't know if it would be allowed, but if a buyer is going to buy one of these properties that has a DADU on it, and they want to rent it out, let's just assume long-term rentals are okay, since we know short-term rentals aren't. Would that change the equation for them to be able to potentially use the income like you can do with investment properties, or not so much if they're living on the property?
It really depends on how it's technically going to be categorized. If it's truly a DADU, I don't think that you're going to be able to use that income. Whereas with like a duplex, you can, because it's in a duplex, you've truly got two property addresses there, and they know you're not going to live in both or whatever. A lot of the time, the more traditional usage of the accessory dwelling unit is to have it be for, a family member, an adult child or in-laws or whatever typically is going to live out there. So it'd be something that if there was previous rent history on it, maybe we could get by with, but it would be definitely up to interpretation.
Okay, so in the other one that I talked about first, there could be triplexes, quadplexes. So if somebody wanted to come in and buy a triplex or a quadplex and live in part of it, how would that change anything as far as would it versus if they just buy it and rent it out? Obviously, they have to do it as
Yeah.
an investment property.
Yeah. So that's actually, if those become more popular, it's going to be an awesome opportunity for some first time home buyers because up to a quadplex, you could do an FHA loan. And with FHA, you do 3.5% down, and suddenly you've got three of your best friends next door, sarcastically speaking, paying your mortgage for you, basically. I've talked to a lot of people over the years that have wanted to do something like that, but the biggest hurdle has been even finding a property to purchase that is a duplex to a quadplex. Like they're not that common. So if they do become more common, I think that's going to be a great opportunity for you to be able to purchase a house and really live rent free in a way, and mortgage free in a way, in a manner of speaking.
Yeah, because I get a lot of people calling me about duplexes and quad whatever, something more than just one, right? Whichever of those options. And they're always surprised when I tell them there's really not that many
Yeah.
there. There's probably more in Nashville than anywhere else in Middle Tennessee that I can think of off the top of my head. One of the things I see in Clarksville, which you really have to be an investor, is there are people sometimes selling entire townhouse developments, which have anywhere, what I've seen, 4 to 12 townhouses on them, which are really an investment. They're not like this where you could live in one and only have to rent out 2 or 3 of them. And I mean, in a lot of areas, you just don't find a lot of even duplexes, let alone tri or quad plexes. So yeah, so that's good. I'm glad I circled back around to that because that could open up some people to contemplate once we get to that point, if we get to that point, thinking outside the box and maybe not just writing that off as something they don't think they can do.
Yeah. Yeah. I mean, that's everyone I've ever talked to. I'm like, yes, this is a great idea. Good luck on both of the properties that qualify for that out in the world that are for sale. Because
I know,
that's
right?
probably two.
All right, so there you go. So that was kind of a little bit of a real estate part of the summary of what's coming potentially maybe in Davidson County, Nashville area, starting sometime, I think April 2026. I could be wrong, but I think I saw that off the top of my head might be the earliest that something could happen. Again, there's things that still have to happen in order to do it. Pros and cons. Check out a video I'm going to do that goes into more of the real estate stuff, so Matt doesn't have to sit here and just stare at me while I talk about it. And thanks again for watching our Smart Moves podcast. Again, we are here to help you make smart, strategic, and smooth moves all throughout Middle Tennessee and maybe beyond. And we appreciate you, and we will be back with a new episode soon. Again, I'm Ann Riley Caldwell, not your ordinary agent, and I'm here with Matt Wilson, New American Funding. We'll see you next time.